Welcome friends to the 28th episode of the Educative series. This is a series brought about by Ramkumar. This will be commentary on IPO of GNG Electronics Limited. This company will be listed after the allotment in BSE as well as NSE, Mainboard. The RTA for this company is Big Share Services Private Limited. The IPO opens on 23rd July and closes on 25th July. In terms of disclaimer, I am currently not registered with any regulator in India like RBI, SEBI, etc. The remaining part of the disclosure you can read at leisure on the screen in front of you. As far as the issue detail goes, as we mentioned, the IPO is from 23rd to 25th July 2025. The anchor investors can invest into this company on 22nd of July 2025. This company comes out with an issue of 1,41,88,644 shares. The minimum application for this IPO is 63 shares at the base price of 14,175. This is a book building IPO and the price ranges from 225 as the floor price to 237 as the upper cutoff price. The shares are valued at a face value of rupees 2. There is no employee reservation indicated in the prospectus as far as this company is concerned. Now I'll talk about the brief of the company. The registered office of the company is located in Mumbai in Maharashtra. Same location is where the corporate office of the company is also located. The company has appointed 3 BRLMS, that is book running lead managers. The first being Motilal Oswal Investment Advisors Limited, followed by IIFL Capital Services Limited, followed by JM Financial Limited. The company was founded in 2006. This company is into refurbishing, that is to repair in layman terms, laptops, mobile and other such electronic gadgets. The main line of business or majority of the income or revenue is derived from refurbishing of laptops and desktops. The clients of this company, the main clients are HP, Lenovo, Microsoft and others. The company has got a brand called Electronics Bazaar, which they use to market themselves. This is an IPO which is fresh issue as well as OFS, that is offer for sale. So out of this issue of 1,41,88,644 shares, 82% is towards fresh issue and the 17.97% is towards the OFS portion, that is offer for sale portion. The proceeds as received by the company on the fresh issue will be used by the company for retiring debts and making payments for other debts and for general purpose expenses. The OFS portion of money that is received from the public who apply for this IPO will be received by the sellers or the people who are selling the shares. It will not go to the company. The company is appointed Care Ratings Limited to look at or manage the proceeds of the IPO as is being used by the company. The company has got presently one subsidiary called Electronics Bazaar. In terms of financials, the company's revenue, profit and total assets for the last 3 years, that is 22-23, 23-24 and 24-25, we'll see. Revenue has increased from 59.5 crores to 1138.14 crores to 1411.11 crores. So you can see roughly it's about double if you look at the last 3 years in terms of increase in revenue. The profit is also increased from 32.43 crores to 52.3 crores to 69.03 crores. So the profit is again around 2 times in the last 3 years. So it is in line with the increase in revenue. The total assets for the same period is 285 crores, followed by 585.8 crores, followed by 719.46. So if you look at the assets has increased by more than 3 times for the same period. So the company is increasing its assets while the revenue is also increasing and the profit is also increasing. Now if you look at the return on equity and PAT, that is profit after tax percentage, for the same 3 years, you'll find return on equity being 28.97%, followed by 31.96%, followed by 30.4%. This is healthy in terms of increase shown by the company for the last 3 years, with a small blip of increase in 23-24. Otherwise, it's almost about 10% more than 22-23. In terms of profit percentage, it is 4.92%, followed by 4.6, followed by 4.89. So it is in the range of 4.5 to 5% as far as the profitability percentage is concerned, which is okay for a company of this type. With huge volumes, they will be able to give good revenue or return good revenue. Now, as I mentioned earlier, the laptops contribute to the higher number of business. So if you look at the same 3 years, the laptops contribute to 79.97, that is have 80%, followed by 68%, followed by 76%. So in 24-25, the laptop revenue from laptop refurbishing was about 76%. So they have reduced it from 80% to 76. To that extent, they are reducing the reliance on laptop, but still it is very high in terms of the total profitability of the company. Others, which is refurbishment of desktops, tablets, servers, then your mobiles, etc. It is 24.5%, followed by 32%, followed by 24.5%. So it's the remaining percentage in terms of the others. So this should increase so that the laptops reliance on laptops will be lesser, although in absolute terms the revenue of the laptop should increase for the main company to maintain good profit. In terms of business, the outside India business is more than India business. So in 2023 it was 44%, followed by 55%, followed by 46%. So it's almost like 50-50. However, if you look at the India business, it is about 50%, and the Arabian Peninsula business, that is Far East, that is Middle East, is about 25%. The remaining 25% is spread between the North America, South America, Europe, and African continent, or Africa and Australia Pacific continent. So to that extent, there is a reliance on Indian market and US market to the extent of 75% of the total revenues so owned by the company. The top 10 customers for the same 3 years in terms of revenue contribute to 44%, 55%, and 46%. So again here, it is not too much of a reliance on these top 10 customers. However, they are being relied upon. One more point to remember is that the customers are all from, many of them are from outside of India. To that extent, exchange risk is involved when you are selling something. The suppliers also are mostly from the US region, from where they pick up the spare parts for the refurbishing of these laptops and other such electronic items. So if you go to see 2023, it was 63%. Then 2024 it became 69, and 24-25 it is 57%. So it's all as good as 57% of the money so spent on getting the raw materials is sourced from outside of India. To that extent, again here the exchange risk is involved. Now, what are those factors which are involved in this company? The most important is the government rules and regulations which they form, the policies that the government issue, not only Indian government but also the government of the countries where they are selling, the US government, Europe government, or Euro government, then African countries, then Middle East, then South America, and all other places in Australia and Pacific where the company is selling its products in. The regulator in India now, in addition to all the regulators that they have been dealing with in the past, they will have to deal again with the stock exchange as well as SEBI in terms of having to report to 2 new regulators. Litigations are concerned, the company is having a limited number of litigations against itself, its promoters, promoter group, directors, and KMPs, that is key management personnel. These are not large in number in terms of count as well as in terms of rupees. However, if any of these cases go against the company will have to pay up money from its pocket, which could affect the bottom line. As far as taxes and tariffs are concerned, they have to be worried about the taxes to that extent that any tax increase or decrease in the country of origin, that is India, or any of the countries where they are selling their stock, as well as the tariffs where they are selling their stock or buying their stock from, especially USA, will create issues in terms of the company being able to maintain adequate profit. The spare parts are all acquired from foreign country, that is mainly from US. As we saw earlier, the large percentage is from US. So any break in getting the spare parts or non-availability of spare parts could create problems in terms of continuity of business. There could be issues with respect to earnings, again because of the same reasons, that they may be exposed to additional tax and tariffs. They may be uh, exposed to situations where they are not able to retain their existing location as it is on rent, and they may have to shift office, which can create continuity in operations, issues with continuity in operations. Now, the most important factor that the company will face or may face is disruption. Today, all the electronic items that the company is talking about are all coming with replaceable parts, or spare parts can be used to replace existing parts. But what if tomorrow, because of some innovation, the electronic items that the company speaks about is use and throw? Then there won't be any issue of refurbishment. To that extent, there is a possibility of loss of business. Now, in terms of the issue in the last couple of years, last year in fact, the companies issued bonus of at the ratio of 1 is to 9. So that will be about 9 shares for every 1 share held. And also on 5th of September 2024, also they have issued instruction to split the face value of the shares from 10 rupees to 2 rupees, which is was taken on 3rd of December 2024. The company, as we mentioned earlier, has limited supplies. Although they don't contribute too much, the number of suppliers are less. So any disruption in the supply chain could create issues for them in terms of them having to search for new suppliers. The company is having non-compliance with respect to several regulators like PF, GST, then ROC, etc. So now two more regulators will come in, that is the stock exchange and SEBI, and the company has in the last couple of months, in last couple of years, have ensured that there are no non-compliances. Similarly, they might be required to ensure there are no non-compliances as far as filings with deposit with the exchanges and SEBI is concerned. The company is in an unorganized sector where there will be competition from the local vendors or local people who may be able to churn out refurbished electronic items at a much smaller cost, at a faster rate of return. To that extent, there is always a Damocles sword hanging over the company in terms of reduced business due to unorganized sector. As we mentioned earlier, the company is heavily involved in import and export of spare parts and selling of the refurbished stock in the non-Indian territory. To that extent, the exchange rate risk is very much prevalent, which the company needs to take care of. One of the promoters of the company has there are a couple of promoters who have at least 3 or 4 companies which are part of this top 10 customers or clients. They are in the same business as this company is in, and hence there is a conflict of interest that arises due to them being able to manage the price or at which the company sells or buys the stock from them. In terms of factors, as we mentioned earlier, there is a conflict of interest. The companies come out with registrations for ISO. They have registered themselves for 9001 2015, 27001 2013, 45001 2018, and 14001 2015. 9001 is quality management systems. 14,001 is environment management systems. 27,001 is database management system, and 45,001 is also for the systems that they're using. So it is basically on safety, since they are dealing in hazardous they could be dealing in hazardous spare parts. They have taken also safety systems registration under ISO. We have summarized the RHP and placed it for you to peruse. This is meant to be purely an educational exercise to make the viewer aware of the pros and cons of the financials and the strengths and weaknesses of the company. In light of the above, there is no reference to the correctness or otherwise of the price and offer, prevailing grey market price, possibility of listing the earnings, etc. Should you find this video informative and educative, kindly pass it on to your friends and relatives. Please press on the like button and subscribe to this channel. Should you have any doubts, queries or suggestions, please contact me at ramkbarose, that is ramkbharosay @gmail.com. Thank you.